Hello everybody, welcome back. Let's have a look at Bitcoin and we'll see how the broader markets have closed, because obviously it's the weekend now. They're all finished until Monday, and it's been a pretty bold move off the back of the FOMC minutes of the meeting, where Mr. Powell was speaking and he basically said some stuff which didn't sound all that bad. But nothing's changed. I just want to put it to you now. Nothing has changed. He was just talking, it was just words, and the market has interpreted that in a bullish light. And we'll have to see if there's any substance to what he said in the coming weeks. So for now, it's just about price action. The markets normally lead into whatever it is that they think is going to happen. The markets basically tell the story. And at the moment, they're telling a story that there's going to be rate cuts, is what they're telling. That's what they're saying. Powell sort of alluded to that, but he also says, I might not. It's just words, really. So let's just think about what we see. So this is Bitcoin on the weekly. We've got a high, we've got a low, we've got a lower high, we've got a lower low, we've got a lower high. We've got, technically a lower low. Candle bodies closed higher, but wicks came down. And does this mean we're going to move up to the top of the range again, this falling channel? If it is, it's still a consolidation until we've broke it out. And if you break out from here, that's when you really actually do go bullish. Obviously, a new all-time high would be pretty much guaranteed at that point. Maybe even a significant move from that portion, really. That's what it means. But for the moment, we're battling with the Bollinger Band itself. And the Bollinger Band strategy suggests, while below a band, well, being the 20 moving average, 65% more likely to remain in that band, while above it, 65% more likely to remain in the upper portion of the band. At the moment, if you haven't closed, this is a weekly, so you've got to wait till Monday morning. If we close the candle body above here, then it does look good for a revisit of the descending trend line, the top of the channel, which currently this week is 69,000, and obviously it'll be descending each time. A rejection from there would also be another lower high, meaning that we could be looking to make a new lower low, candle body basis, basically, between this month and next month. That's also fine as well. That's not a problem. And one thing I was just talking about on the stream last night is that one of the things that we like about Bitcoin on the weekly, whether you're in a bull market or a bear market, it's been pretty relevant these last sort of 5 years or so, is that we have been able to find lows based on the money flow index doing good old bullish divergence on the weekly. 1, 2 marks the low. Boosh, bear market low. 1, 2 marks the low. Not just consolidation low, but also March crash low. Still maintained bullish divergence. It also helps find the tops. Bang, bang marks pretty much the peak within a few $1,000s. Bang, bang marks the new bull market beginning at the end of this bear market. Bullish divergence. And bang, bang navigated our way to this current top, the new all-time high top. So really what I'd love to see, and again, this doesn't count because it's a wick. Wicks aren't registered with the money flow index. It's all about closures, and the closure was a higher low candle body basis. So if we did come down, even if it was just down to the bottom of the channel again, the lower $50,000 zone, we get the bullish divergence, it might be enough to consider, the low being in, just based on previous reads. It has done that before. If we got this and then we had the chaos move, remember the chaos move being the one that I was alluding to that could happen because of the things I'll show you again in a minute, that bring us down into the 30s, and we still have that would be epic. That would be perfect. That's what we want to see. But right this very moment in time, does look okay, as we have now reclaimed all moving averages on the daily, obviously all moving averages on the 4-hourly, and there's a lot of other altcoins that are doing exactly the same thing, being above the 200 simple, exponential, and all other moving averages, with a view to create a golden cross on the 4-hourly. So, but it's not done it yet, but if it were to do it, you'd be looking for supports around 61,000, so that's pretty good to be able to reclaim that, because previously 1, 2, 3, 4, 5, 6, and then bounced out of it basically yesterday. Also back on the daily as well, we had the death crosses confirmed all the way back over here, and we were struggling with the 50 simple and exponential, and we broke it eventually yesterday, and now we're sailing above all moving averages. So it does look quite good, I have to say, but it's still in the context of what is still consolidation formation. High, low, lower high, lower low, lower high, and then we'll see where we go from here. I'm not going to say that this is ready to break out. In fact, I'd rather wait and see what happens next week, because this is my problem, unfortunately. This is the issue that I have with all the markets right now. So first of all, the move yesterday was born off the back of, Fed speaking words, just words. And we've seen the move up in all markets. S&P up over 1%. Nasdaq is going to be up probably double that, wherever she is. Can't see it. No, it's only up 1%. The Bitcoin up like 5 or 6%. Dixie down almost a single percent, and coming down to this 200 simple moving average, which historically hasn't actually been too much of a thing really. It's always been the exponential on this weekly that has caused it. We've literally just sailed straight through it. But as we approach these significant lows, I would be looking for a reaction. And if we did get a reaction, even if it was to just be a dead cat bounce all the way up to, like, let's say the 20 moving average, we're talking a 4% move. So there's a chance of this happening. All right, and I remember back in the last bull market, 2021, we came down to a significant low, and I said, look, I know that, we're feeling a massive alt season right now. We've just got to be thinking about what's going to happen from here moving forward. This is a significant channel. Bang, all massive move up, bang, massive move up to the top. And this is the time we came down here is basically when alt season was beginning. So the correlation exists, but there's lagging effect. Dixie being down at these significantly low levels, and then finally sort of double bouncing and causing, I suppose, a huge ripple in the market really. And then that was it. The bear market began, and the bull market for the dollar began. So we're not there yet, and I think it's cut and dry. It's kind of black and white. If we did come down to this level, the mid-90s, then that's where we would be looking for a massive reaction, a huge big dollar bounce, really, just based on this chart alone. This is a bearish formation. It's the opposite of what's going on with Bitcoin, which is a bullish formation, but it's an uptrend that is likely to break down at some point, just like this is a downtrend which is more likely to break out at some point. So two opposing charts doing the opposite of each other, one going down, one going up, but one in a bullish formation, one in a bearish formation. Interesting. And also we're looking at these on weeklies, which means that however this resolves, probably won't resolve today or tomorrow or next week. And just to put it out there, my general goal is still exactly the same. I'm talking about the total 2, and to put ourselves back on the log scale. I need to make sure that everybody's absolutely clear with this. This is my general projection for the bull market on the total 2. We were going to spend this period consolidating. Well, we've been consolidating, like I say, since March, really. We're going to finish this consolidation at some point towards the end of this year, and then we will break out and we will go to new all-time highs next year. And that's still the overall projection of the crypto market. So that has not changed. My expectation, or should I say anticipation, or maybe just anxiety over a larger pullback, is still nothing in the context of what will happen after that pullback, which is resolve to new all-time highs. It's still the same. I'm not talking bear market. I'm not talking crash that we'll never recover from. I'm talking about something maybe as big as an S&P going down 20%, maybe a Bitcoin going down 40%, and an altcoin going down 60%. I don't know how long many of you have been around. I imagine most of you have been around for a long time. But these sort of moves are nothing really for Bitcoin. Look at this. This is your bull market 2017 into 18. Very good, very nice. Look at that, lovely. But check this out. From here to here, that's a 44% move, right? Before it all kicks off. That's it looks like nothing, doesn't it? I'm only really saying that something like that is possible. And not only possible, but worth having some capital, some cash available in the event that does take place. Because these things used to happen regularly in crypto. A dip of 20, 30, 40% in crypto is nothing. That's normal. And then, boosh, all the way up to the top. The same sort of thing happened here. So this is, in a way, a little bit reminds me, and I've been saying this the whole time, it kind of reminds me of how we've been performing recently. So we had a big massive move. We consolidated about 53% here over a space of about 6 months. We rallied, and then we did really crash hard, obviously because of issues taking place globally. And then bang, all the way up. So if, like I say, what I'm saying does happen, this is what it would be like. Oh no, 43%. It's just a baby step, because look, we get too caught up in the here and now. We forget what it would look like moving forward. And I think, to expect something like, like that, I think that is, to be fair with you, absolutely plausible, completely possible. I'm not going to say it's the most likely scenario, but it's also something that you'd want to prepare for, just the event that it does happen. Now, I reduced some of my positions, 50% in cash at this point, which is still an enormous amount of exposure I've got to the crypto market. It's less than I had before, but it's still an enormous amount. And if this does happen, I will allocate a good 20% of my cash. That's fair. That's fair going. Based on the Dixie, not so much on anything else. It's just based on that Dixie, because we all know the power of the Dixie. Now let's just have a look at the S&P, which is obviously done its V-shaped recovery, which is exactly what we expected it to do when we saw that Monday crash. To go back in time, to those videos, but when this happened on Monday, people were flapping around, headless chickens. What are we gonna do? What are we gonna do? Calm down, everybody. Look at what's going on here. It's a perfect retest of a 200 exponential. A V-shaped recovery is most likely, and now 3 weeks later, the V-shaped recovery has pretty much completed. We've not hit the all-time high on the US 500. I think we might have seen the all-time high on S&P. No, we've not. So we're a few steps away from this, and I think that's very likely to complete next week, so it may be even as soon as Monday, straight up there. But the money flow index is quite high over here. It's not massively high, but it's high enough. 4 hours got overheated money flow index reads as well, which suggests that a pullback is probably required, even if it was just to come back down to 5,350. So there is opportunity still for further upside. There's also opportunity for downside. At this point right now, the markets could pose to be, I suppose, misleading. Almost like a bull trap, right? A bull trap. We got the bull move here. We saw it. We've had it. And if we have continuation, that would be brilliant. But if we don't, I wouldn't at all be surprised. The V-shaped recovery is completed. The next step would be a breakout. And, that's from this level with these kind of reads. If it does start to break out, I don't think it'll have the room to continue much further than beyond the all-time high of S&P. And again, just looking at the Dixie as a warning sign, there is a good chance that the Dixie does a dead cat bounce here of around 4%. So with a 4% move on the Dixie, you could probably assume relatively safely that you would double that for stocks. So 4% up on Dixie could mean an 8% down for stocks, and again, this is just conservative, which could mean a 16% drop for Bitcoin. And with all of that said, that could easily keep you in this consolidation. Effectively, that's what it would be. So let's just say we did 60% down from where we are right now. Okay, it's cool. It actually more or less kind of takes you towards the bottom of this formation again, which could hopefully get a candle body close on the weekly here, which could hopefully give you a bullish divergence read over here. So look, I'm kind of on the fence at the moment, because recognize what happened yesterday. All the markets moved up and Dixie moved down because a man went on the telly and said some words. He didn't change policy. He didn't say anything that anyone hadn't really heard before. He didn't point to anything that no one had ever seen before. He basically just came on the telly and sort of spoke, and the markets went, "Oh, that sounds all right to me. Everything's the same, but it sounds good." Boom. Yeah, a bit skeptical about how the markets will continue to move after, again, just a man speaking about nothing really. So look, we'll see what happens over the weekend. Again, yeah, I'm not really looking to trade in any particular direction. I'm happy to be 50% committed, 50% on in cash, because this is still a consolidation formation, and the Dixie is approaching a major support where a dead cat bounce of around 4% is not unlikely. Let's put it like that. I'm not going to say it's definitely going to happen. It's not unlikely. You know, people get too caught up in what's going on right in front of their face, fail to think about what could happen moving forward. Just as we got a V-shaped recovery from a 200 simple moving average on the S&P, that we might be seeing the same thing take place on the DXY. So just remember that. But again, if you want to zoom out further, which is why I have to reiterate, the plan is still the same. I know a lot of people I get a lot of DMs, you know, about anything that I make. I make a video about anything, and then people start asking me questions about the video that I made, which is fair enough. But there's many different strategies all running simultaneously if you're like me, I suppose. So you can trade on a daily basis, you can trade on a yearly basis, and the overall analysis still is exactly the same. The total 2 fractal, which is a guide of time and projection, I suppose, rather than prediction, it's still the same. Allow for the summer consolidation to finish, whether it's already finished or if it goes down lower, for then the breakout to complete into next year where we sell for profit. That is still the same. Whether we see a 40% drop in the market or not, it still should end up looking similar to this fractal, and that's what this is the overall goal. So that has not changed. So this is why I'm holding on to 50% of my portfolio. This is exactly why I'm holding on to it, because I've allocated positions that I'm happy to hold because I expect them to be higher in the future where I will sell them. But 50% in cash allows me to buy even lower prices in the event that the dollar does bounce and tanks the markets. Even if it's just for a few months, I can still take part in those extremely low prices, significantly oversold prices in my opinion, while Bitcoin maintains a bullish setup, which it is definitely bullish all the way down to $36,000. Does this make sense? I only say this because I get so many comments about it saying, hang on a minute, you were bullish. You were bullish on the market, building a portfolio, but now you're saying you're bearish and expecting lower. Yeah, so there's a difference between 4 hourly, daily, weekly, and monthly. So the projection of the cycle for me completes around next September, 2025 September. If we're going to pull back into these lower levels, it will take place probably this year. It shouldn't take any longer than this year. So what, we're August. So we've only got a few months really left of the year. I know it sounds crazy, but it's true. We don't have an enormous amount of time left in this year. If you're looking at things on a weekly or a monthly, it's not long. And if it fails to happen, if it doesn't happen, no big deal. It means that we're looking to continue the bull market in a breakout, and that is a favorable trading environment where dollar cost averaging is a lot less of a strategy and it's more about setups and taking part of breakouts, pumps, trends, all of the good stuff, instantly gratifying trades. So I would rather have 50% on standby for either a big drop or a more favorable trading environment. Hopefully that makes sense. But the overall analysis that I have on the total 2 and the projection of the bull market is still exactly the same. Whether we do or do not make a new local low, or we come down to a significant low, is still the same. We will recover from this area, go to new all-time highs, whether we see it or don't see it. Right, that hopefully has put that to bed. Feel free to leave comments. Obviously, join the Patreon if you want to know more. Other than that, hope you have a nice day and take it easy.